Good morning, everyone. Welcome to the Daily Market Update Show. And today it's half a day, so there's a very lacking volume. And today we'll be talking about if Tesla will be back to $1 trillion, as well as we'll be looking at most of the big tech stocks: Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta. We'll also be looking at QQQ as well, and we're breaking down if QQQ can head to its 52-week highs, as well as if SPY can continue to go on or not. All right, let's take a look at Tesla first. So Tesla today, after their deliveries yesterday on 466,000 deliveries, and we had a gap up at open, and we hit exactly this resistance that I had joined yesterday. You can check out the Tesla video from yesterday as well. And so today we hit that 284 level, and right at the morning when we opened, essentially the first 20 minutes was all bulls, and then we faded pretty much most of that move. But we did bounce off of this prior resistance, now acting as support, this 275 level. So far it's still okay for the bulls as long as we hold above this 275. Tomorrow we start breaking down from 275, and that would be a red flag for me, because if that happens, that would be a hourly downtrend confirming if we do break that this pivot low right there, 275.11 low. Yeah, so if that breaks, that would shape up a pretty much a 1 hour head and shoulders. You can see right there. Zoom in. So this is the left shoulder. This is the head already formed. We just formed the bounce on the right shoulder. So if we do come down here and form the head and shoulder, which is a bearish pattern, and break that neckline pivot at 275.11, that's an hourly downtrend confirmed. So head and shoulders is essentially a uptrend turning into a downtrend when it confirms. So if the Tesla bulls can actually hold the 275, and if they do, they negate that head and shoulders as well as the hourly downtrend, and they're likely very much testing that 284 again tomorrow on Wednesday, because tomorrow is a holiday. So let's see if that happens. And if we do have break this 275, we're going to go to 295. So the $1 trillion mark is at 115. And so we zoom out at 315, we can take a look at how much resistance is there at 315, which coincides exactly with this top of this chop zone. You can see how many times rejected from it, rejected from it, rejected from it, even back here. Rejection, a lot of rejections. And when we're above it, it acts as supports, right? So that's going to be a tough level for Tesla bulls to get over. Even though we aren't even that close yet, I would say we're still, let's see, 13% away from it. The reason I would say it's tough is because we already ran 87% to here, right? Let's say we had a big base here, chopping around for a while, bounce up and down, and then we come back to here and you ask me what's the most likely scenario that is going to happen. I'm going to say we probably will break it due to us having consolidating for a very long time. But right now, we have moved 89% off the lows, even lower if we count it back here, but there's a good consolidation here. So we count it from here, from one move up, it's close to 85%. The most likely scenario is that bulls are probably tired, So we still need 13% more to even come back to test that. So very likely we're going to reject it if we do even get there the very first time. As of now, we still got two levels to break, 284 and 295 before we hit that. So you can see on the daily chart, it looks like a bearish candle, reversal candle at the moment, right? Due to it be reversing most of that morning move once we gap up. So if the bears do break that hourly downtrend at the 275, that'll be a confirmed hourly downtrend and a bull break, breaking above the prior resistance, lacking follow through, and will likely fill for the bears if that happens. Bulls can still save it due to we haven't confirmed the hourly downtrend yet. So the bulls still have a chance here. Momentum is still in their favor, but if that 275 breaks, then that's the first win for the bears. All right, so we'll see Wednesday who's going to win very soon. Otherwise, that's a good move from the Bulls. All right, let's take a look at go back to QQQ, and then we'll go to SPY, and then we'll go to the rest of the big tech stocks. So let's take a look at QQQ. So QQQ essentially is pretty much flat today, and we got over Friday's chop zone. Remember Friday when we were right here? We'd move like 0.1% for like full 4 hours, and we're saying this could potentially be a distribution zone or accumulation zone. We'll have to see once the market opens. So we were above it during pre-market. You can see we gapped up on it. But the thing is, we still is within Friday's range pretty much. You can see. So I wouldn't say this is a clear rejection or a clear breakout. We're still in that accumulation and distribution zone at the moment. So no break on either side today. So we'll very likely have to wait till Wednesday when there's actually some volume actually coming in. Today's volume it's only half a day, so there's not much going on. And yeah, we'll likely chop into. Let's see if we have even a mini looking wedge here. Yeah, it could be equilibrium forming up, and it'll break on Wednesday. Okay, so just gonna chop. Gonna get tighter a little bit on Wednesday, and then it'll break whichever way it wants to break. The breaks will know volume come in, as well as notable shift when it breaks either side. So we'll take a look at the big tech stocks, give us a better understanding of which way QQQ will likely break once Wednesday rolls around. Let's take a look at SPY. SPY, I'm going to call this a double top because from Friday, and also a quadruple top if we take these two as well. I wouldn't say this is a clear break. It's just low volume grind today, completely sideways, and not much going on. You can see this also forming up a tightening range, high, lower high, and higher low. It's tightening up as well. You can see. So we'll see Wednesday. Likely a distribution zone or accumulation zone. Yeah, quadruple top here. Breakdown, we're likely going to go fill this gap. So far, we haven't. Again, we'll probably bounce off of this 438. As long as the hourly structure is intact for SPY, there's not a lot of zero bears pretty much at the moment. Because we need to see something like this where the hourly structure is favoring the bears to have anything to even happen. The hourly structure is still even in full control. As long as I know the economy seems like it's very bearish. It's been bearish the whole year, but economy is never the stock market, so we don't want to confuse the two together and always separate the two. And we just have to follow the price action. It's and supply. Just keep it simple. As long as the price action in the market telling us it's going to go up, we will continue to trade up until the bear shows us signs that it's going down. Even if we miss the move, first big drop, right? Next mounts, we will be ready for the next drop. As long as bears don't prove anything to us, we are continuing to be staying bullishness on the price action until shown otherwise. So, like I said, the very first step, the hourly charts needs to show us some weakness. Even if the hourly chart on such a low time frame don't have any weakness, then bears aren't going to go anywhere, right? We're not going to get like a surprise attack or something. We'll see it coming because we'll see the drop on the hourly charts. And so far, none of that yet. For QQQ, none of that yet. But if it show up, we'll know. And it will show up also in all the big tech stocks. Nvidia, flat day, complete sideways as well. So, and it's still holding above 420. So as long as bears don't break below 420, bulls are perfectly fine. As you can see, 420 is the prior strong support. And we got back above it, retested it, bounced off of it. So for you bears, you want to break 420, and we will, if it breaks 420, we're coming back to that 404 to retest it. For bulls, sideways consolidation is healthy. Sideways or grind up to 407 would be perfect for the bulls, because the longer we consolidate sideways, the better for the bulls, because of how much we have ran in the past couple of weeks. And if it keeps on consolidating sideways, then it's indicators and a lot of things that will help it for the next move, especially if we consolidate at the top of the range of the move. But as of now, we still don't have the daily lower high set yet. Even though right now it's lower than the prior high, it's not set yet because we need a hourly downtrend to confirm for us to say that it's lower high being set, a probable scenario. Now, like tomorrow, bulls can just bring it back up, right? Because we're still in an early uptrend. So we can't say on the daily chart that this is the set yet. It does look like a reversal candle. So we can even form a early downtrend. But tomorrow we get a red day and an early downtrend, break 420, then I would be more convinced that that'll be the lower high set. And then Burnham will be on the bears to see if they can confirm a daily downtrend, breaking this 404 and below 401. Not just be a shallow drop where we hold 420. That'll be another daily consolidation. Boom. We're back up, continuing up. Get definitely more price action on Wednesday, and it'll tell us. So we're right in the middle. So it's like, we see an early downtrend, we'll get some daily consolidation. If not, we're gonna get to go higher. So, all right, Apple. So Apple's red day today, and we didn't even get into the gap. So I wouldn't say it's that weak at all. We just had a drop in the morning and consolidate sideways. So it could potentially be a hourly bear flag, actually. Let's look. So top of the move to the bottom of the move. Yep, still in bear flag territory. You can see we are below 0.382. So this is the drop. This is the flag. So if tomorrow we drop, then that's a confirmed hourly bear flag confirming, and this hourly downtrend confirming. If we do break this prior pivot low, this prior pivot low is at 91.76. And that happens, then we're probably going to fill the gap. So if this hourly bear flag confirms, confirming means it breaks the prior lows right there, then we would have an hourly downtrend, as well as very likely going to go and test that gap to see if we fill it or not. If the bears cannot even fill that gap after this hourly bear flag confirms, then that's very, very weak selling. So when we zoom out on a daily chart, so once we get that break, right, and we come down here, and we're trying to fill the gap, and the bears just can't even break through back this prior wedge looking resistance, and now it's going to act as support, and we bounce, then that's just very weak selling, because the very first step for the bears is that they need to fill this gap after this bear break out of that flag. Apple, bears, first step is to break the flag and then fill the gap. Bulls negate that flag, so we want to see, even if we drop down back here again, potentially form like a double bottom here and then bounce off of it again. Defense for you guys. If that happens, if you guys can play that defense and double bottom at such a high price already and at such a decent run, Apple's gonna test all that high again. Sure, is how strong this stock is. Yeah, so those two scenarios are very clear. Either we break the bear flag, fill the gap, or we bounce off of it, negate it, and we're gonna test the all-time high again. We'll see. We'll do Amazon, and surprised that it broke this 313, and we came back to it. So that's a small red flag for me due to us didn't have enough time for the rest of the day to break the structure of the chart. So it's just like an inside bar kind of thing. It's not the bar. It's not. We didn't bring any structure. You can see right in the morning we broke resistance right there. And that we're gonna zoom into the 5 minutes to be more clear. So in the morning we bounce, break, broke, finally broke resistance, and that was it. And no bear. We even had volume coming in too. So essentially, this is a bull break. I can follow through for me. That's an initial red flag, and for me, if you're bull, that's an initial red flag for me. If you're bear, you want to see that. When we come back to this range, it would have been a good time for you guys, for you bears, to punch it out, especially when we came back into the range, retested again, couldn't get over it right there. That's a good ad, and just a stop loss above the part high right there, and that's the high, so you're still good. On top of it, double bottom here, and end of the day, that was kind of a red flag for me because no other tech stocks dropped at the end of the day except Amazon when it broke this prior support right there because of this lacking follow through and the retest of that. Um, Probably Maples didn't want to buy anymore, and once we broke that double bottom here, there's people setting their stop losses here, and it broke, and that was the volume. That was the volume there. Interesting enough, if we don't bounce from here on Wednesday, then the structure of the chart is starting to look a little bit worse because we will be breaking through Friday's low. It's not Friday's low, but like Friday's sideways structure low. Start coming down here again. And that would shape us into back to the bottom of the range again. So that would be a bull break, lack follow through, where something happened like that with Google as well, same scenario. And then Google ended up having a daily downtrend confirmed. So far, it's still okay. Like, it's not like end of the world for Amazon bulls or anything, because we're still at the top of this sideways chop zone, right? We're still at the close to the top of the range. We're not like trading down here now. Unless we still hold this 130, bounce off of it, we have a chance to retest it again and probably break it to see if we can full follow through or not. But this is a initial red flag for me where it's a bull break, lacking follow through. But you can also argue today's volume is quite low, so we can say Wednesday is a real paddle. That's going to happen. See if we either break back below 130 or go back above and retest it. But if we start coming back down here, then that's just that initial break with lacking follow through. As you can see. All right, let's take a look at Google. We have Google, Microsoft, and Meta left. So we'll take a look at the three. So Google is, like I said, with the Amazon where there was a bull break lacking follow through. This was the example of Google. So we broke above resistance. You can see this prior resistance, we chopped around it for so long, broke above it, and we came back to it. This was a bigger scale than the Amazon one. Amazon one is only on the 5-minute time frame, on a daily time frame. But so we can potentially see if Amazon will weaken on Wednesday, or it can bounce back to shape up. But if it weakens, it will form a daily downtrend. Then we'll know it's starting to weaken. So Google is still team bear, the only team bear on all the big tech stocks. I think I made a sticky note yesterday on, yeah. So Google currently team bear and still needs to confirm the daily uptrend back to the favor of the bulls. And for the rest of the big tech stocks, everyone is on team bull. And Amazon I would say it's on team middle, but still bullish due to its trend is still in the uptrend. So we'll see if Amazon can stay team bull or might join Google. But as of now, it's 6 against 1. So QQ is still, that's why QQ is still doing well. So we'll see. So now this bounce here is big enough where this could potentially shape the pivot. Higher low, meaning this low of the pivot is higher than the prior pivot low. Now we have the pivot. Google can bounce above Friday's high, which is 121.08. That's a daily uptrend confirmed. So that means Google will join back to Team Bull. As of now, is still a daily downtrend. So can the Bulls play defense? Were they able to hold up this 166 zone and bounce, break above that pivot, 121.8 pivot, or it'll continue going lower? So that's the most key battle for me. Even if we have another red day tomorrow, sorry, not tomorrow, Wednesday. Keep forgetting. So say we come back to this 50% mark right there. It's 118.58, the green part. One more red day, and then we bounce. That can still be potentially a chance where we will be able to test the 121.08 and break above it. Obviously, given if the market is QQ and the tech stocks continue to go green, then it'll help Google. But if let's say Apple bear breaks, fills that gap I was talking about earlier, right? And QQ goes to red, then it's going to drag Google down. So down, that 0.5 level is going to be right here. This 118. I want to see bulls be able to hold that level and bounce. Bears break that level, then the most likely scenario we're coming back down here 116. So levels for you guys to play off of as a bull. Hold this level, bounce. For bears, break that level, we're coming back down here. And this is the bulls want to break. Because we do break that level, this 116, we're probably going to come to fill this gap. So bears can take it all the way down here. How many percent is that? Second. We are 3% away from that. Okay. Yeah, it's not that. 2 red days, we're probably there. Unless we get a super red day. But I don't think we're going to have a 3% red day. Unless this is a huge accumulation zone. Distribution zone. Just going sideways to distribute. And then drop it. Then I don't think I'm going to see a 3-day 3% move on all big tech stocks. But who knows? Maybe it's coming. But as of now, we just follow the trend and the price action, and we will continue to play bearish for Google and bullish on the rest of the big tech stocks. As of now, let's take a look at Microsoft. So Microsoft, I talked about this yesterday, saying it confirmed its daily uptrend back. So this is what Google wants to see. Right now, Google is right here, trading right there at the bounce, and now that's the pivot, right? Now this is the higher low set, meaning that pivot's higher than this pivot. Just exactly like that. See? Microsoft shows that pivot right there, just like this, right? If Google can shape up like Microsoft, where its next move, this candle right there on Friday, is higher than that prior move, a daily uptrend. So Microsoft's back to the uptrend. That's what Google bulls want to see. Next move up, and we'll break that pivot high. We'll have an uptrend right there. So this is exactly the chart Google bulls want to see, and another pivot that's formed today already. See, the candle closes below yesterday's low. Okay. The consolidation on its way again, and can the bulls bring it back up to prior highs, or come back, break this prior pivot, and we are back to a neutral trend. Top is also a little bit of a chop zone here and here, and we can't get over this 341 and can't break below this 330. But it's healthier because it's in a daily uptrend now, covering back to a daily uptrend. It was in a daily downtrend, just like Google right here. It broke below the lows, prior lows. Now that's a daily downtrend confirmed. Now back to a uptrend. Sign for the bulls. So still Microsoft back to Team Bull, and still Team Bull, but in the chop zone. So we'll have to see which way they want to make soon. It's like so other tech stocks, Amazon is in chop zone as well, and Meta is also in an even more chop zone. Meta is like the tightest of them all. You can see how tight Meta is, and we retested it again today. It's like the 1, 2, 3, 4, 5, 6 times. Yeah, retest that. This 89.4 zone, and I know that these are just like lines and everything, but the reason we have these lines for support resistance zone is because everyone else has these lines. So if everyone else has these lines, then they're likely also looking at the same price, right? And that would create the demand and supply. So if everyone has this line here, there will be a lot of supply here. People don't want to sell, right? And if it breaks above it, then probably demand will come in. And so we'll see. When Facebook decides it wants to break, it will break. As of now, it's been since June 15th, so it's been 3 weeks since we have been in this zone, the sideways 289.4 and 278. So as of now, I would say it still favors the bulls because we are on a daily uptrend, weekly uptrend, monthly uptrend, and we're still above the 12 EMA. Bounce off of it many times. 1, 2, 3, 4, and 3 times, right? And a million more times back here as well. 5, 6, 7, right? So it's still favoring the bulls, but players are playing strong defense here, right? So as long as the bulls cannot get over that, we're not going anywhere. But we're starting to close prices a little bit higher. So we zoom in. Let's take a look, see what it looked like in the morning, and if it was another hard rejection. Yeah, I would say it's a slight rejection. It's not like a hard rejection where we, come over here, consolidate a little bit, and boom, bear flag confirmed, right? Now, the initial drop still definitely savable by the bulls. Not bad, we could deal until we confirm hourly downtrend. So this is it, hourly bear flag as well. All right, so let's take a look. Top of the move to the bottom of the move. Yep, hourly bear flag right there. Drop, top of the move to the bottom move, bounce, still in 0.382. Reject from 0.382. So that's a little bit of a potential. That just increases the probability that the bear flag can happen, especially when we bounce exactly to that 0.382 and reject from it. And we just ran out of time on the day. Get that bear flag up. So if Wednesday we break this low to 84.9 right there, this candle's low, we are confirming a hourly downtrend and a bear flag confirmed. So that, I would say, would be a clear rejection for me. 6 times from that daily resistance if it happens. So you bulls, if you are in position, you can just set stop loss right there below this candle's low. You guys, because sometimes even if we have an hourly bear break, just like over here, bulls come back, right? But we have rejected from that place 6 times already. And so right here was a red flag, but bear flag didn't confirm, right? Just like we have a bear flag right here. Will this bear flag confirm or not? We'll see. When it confirms, we need to break this prior low to confirm. So this one didn't, but if this one does, then it's going to start shaping up. The increased probability that this was the high of rejection due to so many times already, 6 times, right? So this one wasn't even clear rejection. See, rejection, no follow through. Rejection, sideways, bear flag, no follow through. And red day, remember. So we'll see if this one gets follow through or not. Right? If this one finally gets follow through, breaks this pivot and then starts breaking the prior pivots, we'll likely test down to this support zone, this strong support zone right there. If that breaks, then it's a clear rejection from me. So you guys, if you guys want to look into the hourly time frame, set your stop losses, because if that breaks, we're coming back down to test this 12 EMA. This EMA will be roughly over here on Wednesday. And if that breaks, we're coming back down to this 277, which is the last chop support zone for bears, right? Sorry, bulls. If that breaks, we're probably confirm a daily downtrend by that time. And that would start looking like that's the temporary top for Meta. Saying that, 6 months later, this is it, but probably 6 months later or a year later, it's going to be higher. This is how these big tech stock works, depending on if we have a big recession or not. But as of now, we just follow the price action. So whatever the price action tell us, we will, because we don't want to get the economy and stock market mixed too much together. It will confirm our bias in the direction too much and messes up our judgment. All right, that's all I got, you guys. Feel free to subscribe if you guys made it this far, or if you guys learn anything. Always share likes and are always appreciated. Feel free to comment below if you guys have any questions on any of the stocks. And have a great week. I was just about to say weekend, but have a great holiday tomorrow. The market is closed, and I'll see you guys. I'll do a natural gas update tomorrow since it's a holiday, so there's no market open. And and on Wednesday I'll be back doing the stock market daily updates. All right, have a great rest of you guys today, and see you guys tomorrow for natural gas.